Evening star pattern. What it is, what it means, and examples. All will be learnt here. Stick around. The evening star pattern is a bearish candlestick formation often used in technical analysis to predict potential reversals in the price trend of an asset. It typically forms at the peak of an uptrend and signals that the upward momentum is weakening, with the likelihood of a bearish reversal. What is the evening star pattern? The evening star is a 3-candlestick pattern that occurs after a sustained upward price movement. It is used to identify potential selling opportunities and marks the transition from a bullish phase to a bearish phase. Looking at the key characteristics of the evening star pattern. First candle. This is a long, bullish green or white candlestick. It indicates strong upward momentum in the market. Second candle. This, a small-bodied candlestick, either bullish or bearish. It can take the form of a doji or spinning top, representing indecision or slowing momentum. Third candle. A long bearish red or black candlestick. This closes well into the body of the first candle, confirming the bearish reversal. How to identify and trade the evening star pattern. Step 1. Locate the pattern. Look for the pattern at the top of an uptrend. Step 2. Confirm the pattern. Ensure the third candle closes well into the body of the first candle, signaling strong bearish momentum. Step 3. Use additional confirmation. Combine the evening star with other technical tools like volume analysis. A significant increase in trading volume on the third candle strengthens the bearish signal. Relative Strength Index, RSI, overbought levels above 70 before the evening star may confirm a reversal. Support and resistance levels. If the evening star forms near a key resistance level, it increases its reliability. Step 4, which is the final step, entry and exit points. Entry. Consider shorting the asset or exiting long positions after the close of the third candle. Stop loss. Place a stop loss above the high of the second candle to limit potential losses. Target. Set profit targets using support levels, Fibonacci retracements, or a risk-reward ratio. This is a simplified structure of the evening star pattern, where a stock has been in a steady uptrend and forms an evening star pattern. Look at the camp closely. First candle. The stock opens at $100 and closes at $110, forming a strong bullish candlestick. Second candle. The stock opens at $111, trades within a narrow range. High of $112, low of $109, and closes at $110.50. Third candle. The stock gaps down, opening at $108, and closes significantly lower at $102, forming a long, bearish candlestick. This pattern signals that the stock's upward momentum has weakened and a bearish reversal is likely. Do you get it? You can see this lesson twice for better understanding. The evening star pattern is a reliable bearish reversal indicator that helps traders identify potential market tops and prepare for downtrends. By combining it with other technical indicators and confirmation methods, traders can effectively use it to make informed decisions. We good? Okay, thanks for watching. Kindly subscribe to our platform.